Good morning, everybody. Hope you had a great evening. The heat wave on the south central plains continues, but nowhere near like it is out on the west coast, where a lot of places are 20 degrees above normal. So it is summertime. Things are supposed to be warming up. Not a lot of news out last night. The big news once again is the Greek EU deal. The IMF and other creditors are balking at Greece. They say it's down to two little numbers, and those numbers are how much of a reduction there's going to be in the pensions, and that's because about 70% of the Greek budget is spent on pensions, and that's where every country ends up under socialism. You end up paying a great deal of people not to work and not to be productive. And the Greek government has said we can't touch the pensions. They've increased the value-added taxes, so there's a couple of numbers to be resolved. My guess is they will be resolved, but not today. Cyprus is meeting with the IMF and the European Central Bank today. So again, the markets will be subject to news spikes. No deal tends to rally financials, bring in selling in the equities. A deal's on tends to rally equities and bring in selling into financials. So we will be subject to news spikes. Today is the third revision of the final revision to GDP, and it's supposed to be revised up from -0.7 to -0.2. And the macroeconomic news for the second quarter is not coming in all that strong outside of the housing market. The deflator, which no one will pay any attention to, at +0.1. And then crude inventories, -1.8 million barrels. And I'll guarantee you that after the reaction to the news, the crude market won't pay any attention to that number. So the news focus will be GDP Final Revision at -0.2, direction of ES, and I don't think it can fall out of bed. It can certainly sell, but not fall out of bed. And then the 5-year auction. Now they ran the market down into the 2-year. The market is basically sideways overnight. The pattern has been 3 higher auctions. So yesterday's auction price was 125.18 to 18.5, right in here, and my guess is we'll probably auction above that number. So my bias is to the upside. So resistance is at 20 to 24 to get started. Then it's going to be basically at 28 to the buck. And I'd like to sell the 23s to 27 area. I don't know if we can get to that. So I'm going to put a question mark here at 1920. And we're going to make 23 to 27 sell 1 and 31 to 03 for sell 2. Come back and revise it after the news. On the buy side, I think we got a pretty good chance to hold. We got pretty good support at 15. So 15-16 is pretty good support. A 13 to 17 buy gives us a little wiggle room. Obviously, you'd like to do it closer to 13. And then 5 to 9 picks up where we were yesterday for buy 2. So I see a trading range market with an up bias as we move into the auction. And we will revise this after the news. Okay, the knob spread came up overnight, and the thing that makes the 30-year so much more volatile than the 10-year is the buying and selling of the knob spread. And it's up about 7/30 seconds from where it was on yesterday's close. So the market is poised to trade higher. A lot of puts were bought, covered yesterday. And when you buy a put back, that means the market maker has to buy a futures contract back. And a lot of large institutions will, because of the vagaries, the problems of timing, the ability to write one check that you can afford and not be put out of sorts by market reactions to news. A lot of people insure with options as opposed to futures positions. The market makers have to put the futures positions on, but it's been a you know, back in the old days you'd insure with futures contracts. Now a lot of the large institutions insure with options. Okay, a little bit stronger profile right here. You can see that volume is to the high side. That's the impact of the knob spread. We have more of a commitment to the long side in this because of the knob spread than we have in the 10 years. So we've got resistance in the 12 areas, so 11 to 15 is sell 1. And then we have yesterday's high at 23.24, so we'll make 23.27 sell 2. On the buy side, leaning against the bottom of value, and we'll adjust it after the news. Buy 1 will be 25 to 29. And then buy 2 will be 13 to 17. Okay, gold's pretty much where it was last night. The IMF has signaled for at least the last week its displeasure with the proposed Greek deals, and they've told them, you know, you will pay us on the 30th of the month or else. And Greece has been trying to work around that. I think they're hoping that France and Germany will quiet the IMF up and eventually make them fall in line. Hard to say. So we find ourselves in the same situation as yesterday. We've got support in this 70-75 area, and we probably have really good resistance 85 to 87. So we're right now at 76.70. So our 73.75 is buy 1, and then 70 plus or minus is buy 2. On the sell side, 79 to 81, let them get stops above the overnight session, and then 85, 87 for sell 2. I mean, it's just where support and resistance are. Everybody thinks there's going to be a Greek deal at some point, so I think the market trades sideways until that deal is out. Looking at the euro, after yesterday's slam, the euro, we should anticipate a pause day, and naturally your eye, because of the coloration, is taken up into this area. So we're at 26, the high is 45, so 45, 55, sell 1, then 70 to 80, sell 2. On the buy side, basically 112 plus or minus, buy 1. And then our old 75 is buy 2. The 75 levels tend to hold as on support as they go down and clean out the stops below a round number, i.e. in this case 112. And then the buck to 25 tends to be where resistance is, so an 1175 market to a 1275 market would be 100 ticks, and that could be where we find ourselves today. Crude oil. Crude inventories today minus 1.8 million barrels. Again, the market will react with the headlines. But then, you know, if it's a bullish number, it tends to sell. If it's a bearish number, it tends to rally. So it's crude really doesn't pay a hell of a lot to the fundamentals. So we've got this breakout from yesterday. So 60.50, 60.75 buy one. On the sell side, 50 to 75, pretty much where we were last night. And then 62, 62 and a quarter. And then 60, 60 and a quarter for buy two. Minus 1.8 million barrels. And it'd be nice if it traded that, but it doesn't. So it reacts, but again, the move typically is opposite what the inventory report says it should be. And that sets up really a good trade where you're prepared to fade whatever the EIA inventory report shows when you come out the other side of that fat bar. Okay, no deal with the EU and Greece. So the indexes are off a little bit. Risk on, risk off. Get a deal. Risk on investments will be back in. That favors the indexes right now. They're under a little pressure, but they probably don't break. Everybody's pretty well convinced that Greece will eventually end up with a deal. So stops below 08 right here would put our first buy at 5 to 7. And then 2100 plus or minus 1 will be buy 2. On the sell side, London's high is 17. We have this move out of the middle at 16, so 14 to 16, sell 1. 19 to 21, sell 2. GDP, second revision was minus 0.7%, which surprisingly enough did not break the market. It brought in buying. Today that's to be revised up to minus 0.2%. Still a negative number, but better than what it was last revision. And again, this market will be subject to new spikes, quick moves. It's probably on hold. We're most likely facing a day where we did yesterday, where it'll be trading within about a 3-point range for extended periods of times. Break out of it, you get a great big fat bar, usually with very little in the way of follow through buying or selling. Okay, it'll take a bit to get everything up and going. I'm going to get busy on that. I will see you as soon as I can.